Today, I'm going to show you how we spotted Solana at $26 before it exploded to $260, 10x, using Elliott Waves in particular, with a little bit of Fibonacci, and we're going to show you how to read the markets like a pro. There's some valuable lessons and insights that you need to know, but the markets show you these identifiable patterns time and time again, and when we spot them, we pounce, decrease our risk, maximize the upside. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to focus on currencies, but now exclusive on crypto. So let's dive in. We're going to fly through some basics on Elliott Waves guidelines, right? There's some really, really key rules, right? With Elliott Waves in particular, markets, I covered this in a couple of videos ago, normally move in a 5-wave sequence to the upside, right? 5-wave sequence. And the markets only exhibit a useful Elliott wave pattern around 50% of the time. What that means is, if the pattern's not obvious, it's not there, we move on to the next. We don't try and force a wave count. And then typically it does an ABC correction, right? More often than not. And there'll be times where there's no clear pattern, so we don't force the count. Each wave is part of a larger degree wave pattern. That is so important to note, right? We've got bigger waves and smaller waves, and there's waves within the waves. We need to be aware of this, really, really aware of this. A couple of things actually, because I'm going to show you this. Look, we're going to see these little waves in these waves, like all of these micro waves within this. This wave 4 breaks down to 3 waves. This wave 5 breaks down, and there's these degrees of count, and it's really, really important that we see this. In fact, I've got a few more things I want to cover with you. Right, I jumped to the last slide. I'm going to jump to the first slide first. Right, jump to the first slide second. Right, Elliott Wave was created by a guy called Ralph Nelson Elliott in the 1800s, 1900s. Elliott Wave Theory. The markets represent a process of mass psychology. So important, because everyone's always asking, why is the market moving up? Why is it moving down? I don't get it. It's fear and greed in a nutshell. And the markets are always growing and contracting all the time. And we're looking for those identifiable patterns. So reasons to use Elliott Waves. Understand the method behind the madness. Because I'm going to jump into a live example with Solana, how we pegged it down at $26 and then exploded to $260. But we can only ever do probabilities and never certainties. But it's really identifiable in advance, and the probability of it happening is relatively high. So we can understand the method behind the madness, why and how the price goes up and down, different phases of the market, and it drives different buying and selling behavior. Really, really important. We want to identify in advance, help your decision making, buying and selling. Most of the game is emotional. So if you're new, you're probably an emotional wreck at times, right? Market's up, market's down, up 100%, down 50%. Like recently, probably down 30, 40, 50, 60%. And it's scary, but we want to get some objective decision making tools in our favor before we jump into a live chart. High probability outcomes, what's likely to occur next, trend or counter trend. This is one of my favorite quotes when it comes to trading. The trend is your friend. Ride it until its end, until it reaches its bend. Should you expect new highs, and how to identify these patterns in advance? So again, I covered this in a little while ago. The basics. 5-wave sequence followed by a 3-wave correction. Impulsive, corrective, right? That's what we know. It happens time and time again in the markets. We're seeing it in Bitcoin. We're seeing it in other coins. And today, I'm going to show you how we saw this in Solana. In Solana, we spotted it down here, and now it's exploded to up here, and this is what we expect next. It's like textbook. Unbelievable. Rules and guidelines, right? I think I covered this now. We covered this first. We'll cover it last. So we're going to dive into a live chart now. So with Solana, right? Look at this, right? I'm gonna have to show you like this, right? This is so important. It's unreal, but it is what it is, right? Because we did this first video with Solana months ago. But look at this: 1, 2, 3, 4, 5. Yeah, you see that? Now we're gonna dive into Solana. What do you see? Right? 1, 2, 3, 4, 5. It's like the theory and reality, amazing. But what most people don't realize, right? If I just clear this, is if you're new to the channel, we did this video here on Solana. Guess what the date was? Well, the date of the video was June 14th, 2021. I only got 204 views, so my channel was a lot smaller. 204 views, right? Solana preparing to take off, for takeoff. Huge potential. Look at that title, right? That's what you call a title and a half. Solana preparing for takeoff, huge potential. Why did I say that? Well, to be totally honest, all I saw was this beautiful textbook A, B, C for a wave 2. What do we anticipate next? Is a wave 3, literally off the charts, right? Literally off the charts, right? So now we're going to cover that. So we got the theory, but how powerful is it? How useful is this? And by the way, if you want to learn how to do Elliott waves and combine with Fibonacci, which are other ratios, I'm not going to cover too much today on Fibonacci, but mainly Elliott wave. In the link below, I got my free Elliott wave and Fibonacci masterclass. Just shows you how to do this. But let me show you how powerful this is. So now we're looking at this wave 2. Where was this on the chart? So if we jump back into the chart, it was actually all the way back down here, right? Look at this. This is where it was. The video was done. This is it's so beautiful, right? I love it when it comes together like this, right? And we can only do probabilities, but this is where the video was done, right? This here. So look at this. That's where the video was. And what we said was we're going to anticipate this wave 2. Boom. And it happened pretty much in textbook fashion. Textbook fashion. Look at that. Boom. That's what I was expecting, and that's what happened. And then we said in advance, what do we expect next? Well, we expect a wave 3. We expect a wave 3. What does that look like? Well, I'm going to do a quick bit of Fibonacci. I'll do a bit of Fibonacci. I'm going to cover some more Fibonacci in days to come, but it's also in the masterclass below. I'm just going to measure this here. I just want to show you how powerful this is. Right? There's particularly two ratios, and it's 1.618 to 2.618. Two of the really key ratios for wave 3. And what we see are these 2 points that we go, is likely that the price, and we set this in advance, really in advance. That's key to know. We're likely to hit this point. This is the most typical, and this is the overextended price over here. And guess what happened, right? Look what happened. And what do you know? Bang. Right? How cool is that? How cool is that? We did the video back here, but we're looking at Elliott waves. We're looking at this. We're looking at this. This is our template, is our framework, or this to keep it simple. Boom. But then I'm showing you like this because most people don't realize the power of this. They kind of are just, I don't know, just missing it, right? Missing it. So then what I did was I said, look, now we've hit this wave 3 high. It's time to take profits because what comes after a wave 3 is a profit taking wave called wave 4. Right, so then what happened was it was actually a short wave 4. I thought it was going to be a bit longer, to be honest. It was a nice A, B, C. I thought it was going to go a bit longer compared to, like, looking at how long this was. It was an A, B, C. But as soon as this high got taken out, this high over here, that's the confirmation that this is going to be a wave 4 low. Right? We don't know that this was going to be a wave 4 low until this high over here is exceeded, until this price exceeds this spot. So what happened? Well, the price shot through that. Bang. That gave us the confirmation that this is the wave 4 low. All right. So now what we can do, check this out, right? This is so powerful. I love this. I love this so much. I got so enamored by Fibonacci and Elliott Wave when I started to do it as a 23, 24-year-old back in 2006, 2007. And then I got featured in that best-selling book, High Probability Trading Strategies, just by learning this stuff, right? Because he was one of my mentors that taught me this stuff. So all we do is we measure. I'm going to do this fast. I'm going to cover this in more depth. I cover it in more depth in the masterclass, but I'm going to cover these lines here. Bum, bum. And the two key ratios for a wave 5 is 62 to 100% of wave 1 to 3. You go, what does that mean in English? I go, well, these two lines here. I'm going to draw it like this. This is what we want to be really aware of, where typical wave 5s end, right? So now, price goes up, bang, and boom, it goes to this point here. What also happens, because remember, when I was covering this lesson with you, I got a lot of lessons lined up for you. When I was covering this lesson for you, this one here, I was showing you that there's waves within the waves. This is so important. A bit advanced, but I want to show it to you though. So this is the wave 5 that we're looking at, this part here. Yeah? Makes sense? But then this yellow line, if I just change the color here, I'll do it in yellow actually. This yellow line here, bump, 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 here, is we can then project with almost pinpoint accuracy where this wave 5 top is likely to be. And I'm going to show you. Now this is in hindsight, I know that, but we did it in foresight. If you watch back my videos, you'll see that we said in advance, this is likely to happen. But now you can see the method behind the madness. So what can we do here? So watch this. Check this out, right? This is so cool. This is so cool. And I'm showing you like this because we can do this in advance. In advance. So some people think, you can only do it in hindsight. I go, no, in advance. So here, what does this look like? Right here, it looks like exactly what we're talking about, right? A wave 1, a wave 2, a wave 3, a wave 4, and a wave 5 of a wave 5, right? So now we've got this mark here, this line here, which is the typical maximum 62. Well, typical maximum is 100%, but here is a very, very common ratio. But by itself is not enough. There's a couple of other things that we can do. I'm going to do it here. Kind of, I wanted to just focus on Elliott waves, but I can't resist because it's so cool. I'm going to show you an external retracement, which is a very common zone, and we're looking for a wave cluster. A typical maximum wave 5 is an external retracement. Basically, when these lines are close together like this is very significant from a psychological perspective. And then I'm going to do one other ratio, which is so powerful. It's the same one that we did before, but on this micro scale. And look, we've got this range. Now what we do in advance, and I always do this in advance, is this tells me this is really highly probable going to be a top in this zone. So if you followed my first video back in June, was it June? June 14th. You can go back and watch this because, it's just textbook stuff, right? It was $26. And now it's done a nice, beautiful 10x. This has got a lot of liquidity. This is a big coin, right? Solana is a big coin, right? Once, we did the video over here, imagine you managed to buy down here and you've ridden this wave up. A lot of people are terrible at selling, like horrible at selling. Like, yeah, I made 10x, 5x, I made 100 grand, I made a million, I made this, I made that. Oh yeah, but do you know when to take profits? So I like to take profits at the peak of wave 3s before a wave 4 correction. And then the last profit is going to be at a wave 5, right? Wave 5 zone. So here I'm looking to sell everything, right? And there's a couple of different strategies you can do for an exit. But here, is a really, really key zone. And now it's just following textbook psychological behavior, right? It is what it is. And look what happened next. But in fact, we can do this. This is a quite cool tool in TradingView. You can do this replay button and you can take the data from any point. And now we can actually just zoom in as if the data is here, but now we're just going to forward the data one bar at a time. And look at this. Look at this. Oh, man, look at that. Just beautiful. This is where the market is right now. Right now, we can now go, it looks like, with high confidence, we can get rid of all this. Yeah, it's no longer relevant. The information is now live as of when I'm recording this video. But this is the more the general lesson that I want you to take. So what we're going to take now is a couple of things. One big thing, most people don't know this, is this movement to the downside is the biggest move to the downside during this whole phase here. Right, that's what you call an overbalance of price. Overbalance of price, really, really important. Overbalance of price. So the trend has reversed and it looks really highly probable. There's a couple of indicators that we can look at, but we're not going to do that today. What we're going to look at today is going back to the theory, right? What tends to happen after a 5-wave sequence? Well, what tends to happen is this here, this A, B, C, right? This 3-wave. And I believe we've only made the first wave, right? So that's important. That's important for us to see. So can we see it? Well, let's have a look. What are typical ratios? I won't going to do much Fibonacci today, but I can't resist. I have to show you this. This is so cool, right? So where's the typical ratios of a correction? 50% is the typical minimum, and we haven't hit that yet, right? We haven't hit that yet. So that tells me that the correction is not likely to be over. 60% to 78.6%. These are the typical corrections. How long does correction take after a 5-wave sequence? Well, the absolute minimum is actually 38.2. So we have to be a bit subjective. Most common question I get is, yeah, where does wave 1 begin? Does it begin here? Does it begin here? Does it begin here? We have to make a judgment call and go, where does this movement begin? Most significantly, I'm going to say roughly around here. Right? It doesn't make too much of a difference, but that's important, right? So that's where we're saying wave 1. So we're going to measure the time taken for this wave 1 to this wave 5 high. We're going to double click on it. And then what I want to project forward is absolute minimum 38% to 50 to 100%. So Solana likely is going to go through a bigger correction. This is me, not even looking at the fundamentals, just going, look, psychology is psychology. A lot of people have made a lot of profit, right? A lot of big boys, like, billions of dollars being pumped into Solana and the billions were pouring in here. A lot of people make a lot of profits, right? Just think about it. They're 5x up, 10x up, 7x up. And a lot of big companies and big players are putting in hundreds of millions, tens of millions, maybe even billions into this. What do you think they're going to do now? Massive sell off, profit taking. And a lot of people always feel like they've missed out. So this is what I mean by the psychology of fear and greed. So what's likely to occur if I just forward it, bang, correction until February. Yeah, we're talking about a big correction. This is no joke. This is like a big correction. So what we should anticipate is this is only the first leg. Yeah. What would invalidate that is if this high gets taken out, then we got to reevaluate. But until that happens, what we should anticipate is this, and then this into the minimum of this zone, but it might even go longer. That's the minimum. The typical normal is actually more like March. Yeah. And just be prepared for that. This is what it is, right? I love Solana. I think it's great. I also love Valas, which is based on the Solana code base, but EVM compatible. But just looking at the theory on this, we go, theory says this, bang. So far, it's been following textbook. You can go back and watch the videos, and this is what we anticipate for Solana, and that's where we are today. So there you have it. So if you like today's content, like, subscribe, hit the bell notification. We just covered some really high level stuff, but built courses around this because it's so important. So take my free Elliott Wave Fibonacci masterclass to go into a bit more detail, and I combine Elliott Wave because if you use Fibonacci by itself, it's good, but it's not that powerful. If you use Elliott Wave by itself, it's good, but it's not that powerful. But if you combine the two, oi, now you're talking about confluence of events. Now the probability and the edge goes much more in your favor. Let's see today's quote. Have I got a quote ready for today? I think I have. Yes, it's Leonardo da Vinci. Simplicity is the ultimate sophistication. One of my things that I really love about Elliott Wave and Fibonacci is everything is difficult before it's easy. That's just life. So, once you have to kind of go through the learning curve. That's just normal of anything. Whether you're driving a car, whether you're learning Elliott Waves, it just is what it is. I've done my best to simplify it, but it is what it is. But simplicity is the ultimate sophistication. So these are sophisticated points that I'm covering with you, but simplifying it so much that you can apply it. And then once you can apply it consistently, then it's just all about keeping it simple because there's so many tools, so many other things you can use. But it's like, what's going to be the 20% that gives you the 80% of the results? Fibonacci, Elliott Wave, so powerful. So there you go. Let me know what you think. Tomorrow, what am I covering tomorrow? I'm doing a series of education right now. Right now, I need to also remember to move this mouse. Keep forgetting to move this mouse because I'll do a screen record. Right, we're going to do a bit more, but what we just did using TradingView, we're going to do on DEX tools. A few more lessons, but then using DEX tools for the younger coins. There's a few examples I want to show you using what we're learning, but just in a bit more depth. All right, I'll see you very soon. We're going to smash out the ballpark. I've got a couple of more advanced lessons I want to cover with you. See you soon.